Welcome to the Global Update. The world is always in motion. It spins, it changes. And the pathways of global trade are the very arteries of this constant transformation. For centuries, empires have risen and fallen based on their control over these vital routes. Spices, silk, oil, and now data all flow through channels carved by nature and human ambition. These routes dictate economic fortunes. They shape geopolitical landscapes. They are the lifelines of our interconnected planet. Today, as we stand in mid-2025, the currents of global commerce are not just flowing, they are churning with new, powerful forces. Historically, certain geographical choke points have held immense power. Think of the Strait of Hormuz or the Suez Canal, and of course the Panama Canal. These narrow passages became linchpins of global logistics. They were marvels of engineering in their day. They shortened journeys, they connected distant markets. For over a century, the Panama Canal, in particular, has symbolized this power. It has been a testament to human ingenuity's ability to reshape the globe for the purposes of trade. Its locks and channels have been the gatekeepers of oceanic commerce in the Western Hemisphere. But the global stage is never static. New players emerge. New ambitions take shape. Now, a colossal new contender is appearing on the horizon. Technology is the great accelerator of our age. It acts as a powerful flattener. It breaks down old barriers. It creates new connections at breathtaking speed. In the realm of global trade, this technological wave is transforming everything. We are witnessing a revolution. It is quieter than the industrial revolutions of the past, perhaps, but it is no less profound. The future of trade is not just about bigger ships or wider canals. It is about smarter systems. It is about seamless integration. It is about the relentless pursuit of efficiency driven by digital innovation. Consider the tools now at our disposal. Artificial intelligence is optimizing shipping routes in real time. The Internet of Things allows for unprecedented tracking of cargo. Blockchain technology is promising secure and transparent supply chains. These are not futuristic fantasies. They are increasingly embedded in the daily operations of global logistics. This digital transformation is the invisible hand. It guides the physical movement of goods. It makes global commerce faster. It makes it more reliable. It makes it more adaptable to the disruptions that inevitably occur in our complex world. This pervasive digitalization underpins the feasibility of massive new physical infrastructure projects. Long before the current discussions about a new transoceanic canal, other ambitious projects hinted at a new paradigm in global infrastructure. These projects blended grand engineering with environmental responsibilities. One such endeavor was the Taiwan Isthmus Railway. Its innovative approach provided valuable lessons. It demonstrated that large-scale transport could be efficient and ecologically conscious. Designed with sustainability at its core, it minimized its environmental footprint. Powered by renewable energy sources, including solar and geothermal power. Its rolling stock used low-emission engine technology and regenerative braking. This commitment to green principles was a significant departure from older projects. The Taiwan Isthmus Railway was a hotbed of technological innovation, featuring automated scheduling and AI to optimize train movements. Smart sensors monitored structural integrity and environmental conditions, integrated with local economies fostering sustainable development. China's economic ascent has been the defining story of the last few decades, and its Belt and Road Initiative is the grandest expression of its global ambition. The new $50 billion canal project is a bold and strategic move. It is a statement of China's long-term vision for global trade. The sheer scale of the proposed canal is staggering, likely through a Central American isthmus to rival the Panama Canal. The intent is clear: to create a new major artery for global maritime traffic. Panama's crossroads, a challenge to century-old dominance. For over 100 years, the Panama Canal has been more than just a waterway. It has been a symbol of American engineering might, a symbol of global connectivity, a vital artery that dramatically shortened shipping times between the Atlantic and Pacific Oceans. Its opening in 1914 reshaped global trade routes. It cemented Panama's place on the world map as a critical transit hub. Generations of Panamanians have seen their nation's identity and economy intrinsically linked to this marvel of ingenuity. Its expansion, completed in 2016, was meant to secure its dominance for decades to come. The emergence of a new Chinese-backed canal project in the Americas presents an unprecedented challenge to this long-held dominance. If this new waterway becomes a reality, it will offer a direct alternative for shippers. It will break Panama's monopoly on trans-Isthmian container traffic in the region. The very idea strikes at the heart of Panama's geopolitical and economic significance. For a century, ships had one primary choice for this crucial shortcut. Soon, they might have two. This is a paradigm shift that Panama cannot afford to ignore. The potential impacts on Panama are profound. Economically, a significant diversion of traffic to a competing canal could mean a substantial loss of revenue from tolls and related maritime services. This revenue is a cornerstone of Panama's national budget. Navigating treacherous waters, political and financial hurdles. Undertaking a project of the magnitude of a new transoceanic canal with a $50 billion price tag is an endeavour fraught with immense challenges. The path from conception to completion is littered with potential pitfalls. Political complexities are perhaps the most immediate and visible. The host country for such a canal will inevitably face internal political debates and potential instability. Regional rivalries could be exacerbated as neighbouring countries assess the strategic implications. And of course, the ever-present geopolitical tension between the United States and China will cast a long shadow over the entire enterprise, turning it into a high-stakes chess game. Then there are the financial risks, which are monumental. Securing and managing $50 billion is a colossal undertaking. Concerns about the return on investment will be paramount, especially if global shipping patterns shift unexpectedly or if toll revenues do not meet projections. For the host nation, there is the significant risk of debt sustainability. Large infrastructure projects linked to China's Belt and Road Initiative have, in some cases, led to concerns about debt trap diplomacy. Ensuring transparency in financing and contracting will be crucial to mitigate these risks and build international trust, a commodity often in short supply with such grand ventures. Beyond the political and financial realms, nature itself presents formidable obstacles. The chosen route will likely traverse challenging terrain, possibly prone to seismic activity, hurricanes, or other extreme weather events common in tropical regions. The ecological equation, balancing progress with preservation. Mega projects have mega impacts on the environment. The construction of a new canal through sensitive ecosystems is no exception. Balancing economic progress with environmental preservation is critical. The potential environmental consequences are vast. They demand careful consideration and proactive strategies. Otherwise, the cost to nature could be irreversible. Building bridges, not walls, the imperative of global collaboration. The future of global trade routes should not be dictated by any single nation acting alone. China's ambitious project depends on broad international cooperation. This is a practical necessity. The interconnected nature of global shipping touches many nations. True collaboration must extend across multiple dimensions. Technically, global expertise enhances safety and innovation. Operationally, fair standards ensure the canal serves as a global public good. Involving international bodies builds consensus and prevents disputes. This fosters shared ownership and responsibility. The dawn of a new era? The canal's ripple effect on world trade. If this $50 billion Chinese-backed canal project successfully navigates the myriad challenges ahead and becomes fully operational, it will undoubtedly do more than just move ships. It will redraw the established maps of global shipping. It will send ripples across the entire edifice of international trade. The most immediate impact will be on logistics. A new modern alternative to the Panama Canal could significantly reduce transit times and transportation costs for certain routes. This could reshape supply chains, making some trade links more viable and others less so. Entire industries might recalibrate their sourcing and distribution strategies. The economic consequences will be far-reaching and unevenly distributed. Countries and ports that find themselves favorably positioned on new routes emerging from the canal's operation could experience an economic boom. Conversely, those that are bypassed or see their strategic transit roles diminished, like potentially Panama, could face significant economic adjustments. The canal could also accelerate the ongoing shift of global economic gravity towards Asia, particularly China, by providing more efficient and secure pathways for its trade with the Atlantic world. This is not just about physical goods, it's about the flow of capital and influence. The innovative fusion of advanced technology and global trade, which this canal aims to embody, is another potent factor. A smart canal, leveraging AI, IoT, and automation for maximum efficiency and safety, would set a new benchmark for infrastructure worldwide.